debt to buy housing now that it is costing them more than it ever was, even though interest rates are at all-time low. It's exactly what happened in other countries around the world as well. Eventually, the debt levels just get too high and people don't want to borrow anymore and they can't actually service any more debt, irrespective of what the borrowing cost is, and they don't want to, especially in an environment, as I said before, where there's more risk around unemployment, cost of living pressures are going up and the like. The idea that more and more people will just want to constantly leverage into property is just not accurate. And that's why what we're seeing now in our property market is first home buyers largely in retreat, and the only people that can come in and buy are basically investors, which is not really all that healthy in terms of long-term fundamentals underpinning the market. And the last argument that I want to talk about is this idea that we have a housing shortage, and it's commented on all the time. The National Housing Supply Council a few years ago came out with a report that suggested we needed 85,000 new homes in the nation to meet demand back then. Problem was 60,000 of the homes that they claimed were needed were for people that were either homeless living on the street, homeless living with friends, or marginal residents of caravan parks. Now, it's obviously a social issue that we have a homeless problem in this nation, and that's not something to sneeze at or to pretend doesn't exist, but it's got to be stated that from an economics perspective, those people are not going to be sources of real demand to be able to buy a house. They're not going to be able to go and put 20% down and get a loan from Commonwealth Bank. But what's really interesting is actually how many spare bedrooms we've got in this nation already and how much more effectively we could use our existing housing stock. Because this chart here comes from the Australian Bureau of Statistics. They have a housing and occupancy cost report. It's only a couple of weeks old. And what it shows is that over 75% of Australians report that they have at least one spare bedroom in their homes. Now, if you think that there's 8 million households in the country, that means we've probably got somewhere in the vicinity of 5 to 6 million spare bedrooms already in this country without having to build one extra house. Now, of course, that doesn't mean we're just all going to start letting random people move into our houses so we can use them more effectively. But what it does mean is that as times get tougher, you're going to have these kind of situations. You're going to have maybe a couple of girls sharing a 3-bedroom apartment on the North Shore saying, maybe we can have another flatmate, that'll save us some rental costs. You're going to have young families say, you know what, we can only afford to have one child, so maybe we only need a 2-bedroom house rather than a 3-bedroom house. You're going to have university students and young professionals say, maybe I can live with mum and dad a little bit longer so I can save some money. Jamie's smiling at me going, I hope my kids don't stay here longer. And whilst that's obviously just a theory that I'm espousing, if you actually look at what's happened in the last census data, it's exactly what happened. For the first time in 100 years of us doing censuses in this nation, the number of people living in each house actually went up because people are finding it harder to get ahead. It doesn't show up hugely, it's not a huge change, but that is a 100-year trend that came to an end. Up until then, we had constantly had less and less people living in each and every house. But now in the last 5 years, since basically the GFC hit, people are finding it harder to get ahead and they're going, you know what, maybe we don't need all these spare bedrooms, maybe we don't need these huge houses, we can use our existing stock more effectively. And that is going to be a headwind for house prices going forward. I'm very confident that number will be even higher another 5 years from now when we do our next census. And the last thing that I think should make people be a bit wary about house prices going much higher for the foreseeable future is the ageing population again. And this is something that is hardly ever talked about when it comes to home prices, but the actual finances of the baby boomers as they enter retirement. A little bit of information to put this in context. There's basically 5.5 million baby boomers in the nation. They account for roughly 25% of the population. Despite that, they own half the nation's housing stock as it stands today, and it represents basically 1/2 of all of their net worth. At least half are planning to move and downsize in retirement, and at least 1/4 are planning to sell. And according to some analysis done by ASFA, Australian Association of Super Funds, 86% of them are either unprepared or are only somewhat prepared for retirement. Now, I got these figures at the end of 2012, and it shows that the average couple between the age of 61 and 64, if you look at the males, they have about $200,000 in super, and the females tend to have about $112,000. So about $310,000 all up. Let's round it up to $325 just to be nice. We also know that it's going to take them, or it's going to cost roughly $55,000 a year to live a comfortable retirement. And if you go through all the surveys, most baby boomers are planning on living very, very nicely in retirement. So that's a pretty conservative figure in terms of what they'll probably want to spend. Now, if you were to take $325,000 and invest it in a diversified growth fund and it was going to return 8% like all of the big fund managers will tell you they can do for you, not as good as 9%, which gold's done over the last 4 years, but anyway. Even if you were to do that, your money would run out somewhere between year 7 and year 8, meaning this couple is probably going to run out of money, or a couple like this will run out of money between somewhere in their late 60s or early 70s, depending on when they retire, well short of when they're most likely to live to. And this is, as I say, this is the average Australian, so it's hugely skewed by very, very wealthy Australians. Most Aussies are in nowhere near this good a financial situation, or most boomers aren't, as they approach retirement. So the bottom line is a lot of them are going to need to sell their homes to basically pay for their expenses in retirement. And what that's going to do is provide a huge headwind to house prices, and it's something that has occurred all over the world. Basically, as the population has aged, and you can see that by these lines here, which are falling, house prices have basically reached their peak and started to correct, because you essentially have, it's just basic law of supply and demand, proportionally more and more people looking to sell and less people that are willing to buy. Very, very simple and easy to understand, and it will be a headwind for Aussie housing going forward. So the idea that the housing market is set to take another boom and it's a fantastic place to invest, I'm absolutely with Chris Joy on this. I think people should be very cautious. You need to spend a lot of money to do it. There's a lot of costs. There's a lot of leverage involved as well. So I think it's something that people should be appropriately cautious of. And as a final sort of slide and a final thought, and I think a good segue to Ronald's presentation about gold, is over the last 130 years, there have been 3 major cycles between the price of gold, or the value of gold, and the value of Australian housing. And you can see that from this chart here. This goes all the way back to 1880. And what it shows is that at the peak of a gold bull market relative to the housing market, you've tended to be able to buy a house in Sydney for about 100 ounces of gold. Now, 100 ounces of gold today will cost you about $150,000. That'll only get you the 20% deposit you need on a Sydney home right now, because that's going to cost you about $700,000 at today's value. Now, none of us can be absolutely sure that history is going to repeat itself, but I fully expect to see that ratio narrow significantly in the coming years ahead. So for me personally, I will definitely be trying to just acquire my 100 ounces of gold, because I feel very strongly that it may well end up buying me an entire home in the years to come. So thank you very much for your time, and I think, Kerry, you're coming back onto the stage now. Cheers.